Right, here we go. It's Tuesday, February 20th, pre-market. We've got about 18 minutes until the market opens. And what we're seeing overall is a slight decline in futures. The S&P is off a little. The Nasdaq is down a little. Crude was down and is now bounced back up. So this is going to be interesting for oil prices today. We saw some big announcements yesterday on Monday when the market was closed. Capital One buying Discovery, so two large credit card companies merging. We saw this morning Walmart and Home Depot, which we can see here, came out with earnings. Walmart's earnings were great and were up, even though forward year guidance wasn't necessarily the most positive. Their stock is still up $8 in the pre-market. However, Home Depot is the other side of the coin, and although earnings were good, sales were down for, I believe, the fifth quarter in a row. So they're off about $8. So people are not spending on home improvements to the extent that they were in the past, particularly during the pandemic when a lot of people underwent renovations and spent on their home and home office to improve that. Um, that probably just tells us that consumers are spending their money elsewhere. So they're probably spending on travel and experiences and things like that. And that's why right now the airlines are doing so well, and a lot of money is going into the airlines from various investors. So you want to look when you're looking at different stocks and seeing earnings come out. You want to listen to the narrative, but then think about, well, okay, so if people aren't spending on X, which is say retail, then where are they spending, or are they not spending at all? So try to figure that out, and that'll help you to determine stocks in a sector that is expected to grow or is poised for growth or is already growing. So obviously, with retail, let's say, being down, if it were down, then you're going to look at stocks. And transport stocks are trucking companies like J.B. Hunt, there are railroads like CNR and CP, and a number of U.S. railroads. And those will likely take a bit of a hit because there aren't as many shipments being made to facilitate those retail transactions. So those are kind of the cycles and the things that you want to be thinking about in terms of just how the economy works. Now we get into oils and energy. So we can see that some of these have some positive movements. Chevron up 74% or 74 cents pre-market. Valero up 6 cents. Again, pre-market doesn't necessarily mean anything as we go into the open, but what we do see is we see crude is rebounded and is almost, I mean, it's getting close to 80 cents a barrel. And it was down as low as the low 70s, high 60s within the last couple of months. So that should bode well for oil prices. And part of the problem with this is oil prices impact the inflation index. So with oil being higher, that's one of the costs, one of the inputs that goes into that bigger bucket of goods that goes towards inflation. So other pieces that go into that are obviously food costs, which are critical, and housing costs, as well as clothing costs and costs of products and things like that. So there's a number of factors that go into that inflation bucket, but oil is certainly one of them. And as oil increases, the cost of gasoline at the pumps increases, the cost of jet fuel increases, the cost of diesel increases for trucks. So it has an impact on the overall cost of goods, and that's what drives those costs up. What we are going to see today at the after hours, so after 4 o'clock, we're going to see Palo Alto Networks announce earnings. And I think there's an opportunity here, certainly for some money to be made today in this stock because there should be a fair bit of volatility. And I do expect that the earnings of this company are going to be very good. And it could cause a boost after hours when they announce if they do, in fact, come in line better than expected. What's weighing on the whole market right now, but when it's weighing on the market, presents an interesting a potential buying opportunity is NVIDIA's results. So NVIDIA is announcing tomorrow after hours, and this is another company that I think is going to see some big movement swings today and have a huge amount of volatility as people anticipate what is going to happen tomorrow after hours when they make an announcement. Now, as I said in past videos, this announcement is going to have to be lights out. Like, it's going to have to be incredible. Future guidance is going to have to be incredible to sustain the kind of growth this company has had and the value that it has created in the stock price today. But if it does come out, and almost all of the other chip companies have come out with amazing earnings this quarter. So I'm starting to feel pretty positive that we're going to see some really incredible news come out of NVIDIA. But that said, it could go in the opposite direction. If it is positive, it's going to lift everything else in tech and probably across the board. So you'll be getting in when some of these stocks are down today at a great discount and likely setting yourself up for a nice little profit. The stocks that I would have a look at are the ones that are the golden children and that are making a ton of cash and have great market share. Companies like Meta. So when Meta drops $5 or $10 and gets down into a level that becomes much more attractive, this is an opportunity to potentially pick this up and then wait for that to rebound. Even if you were to buy it today at this price at 468, and NVIDIA were to come in with less than stellar earnings, this thing may drop as low as 430 in the next week or so. But I would expect by the next quarter, which is their announcement's going to be 2.5 months away, you're probably going to see this thing back up to 480 as well. So it depends on whether you want to sit on that and take a bit of a potential short-term loss, or you just want to hold off until after NVIDIA and see what happens, and then find an entry point that meets with what you're willing to pay for that stock. You've got a lot of opportunity today in the market. Google is looking amazing at 141, in my opinion. Adobe's way off because of the ChatGPT or OpenAI release that allows for 1-minute videos to be created. This thing hasn't even become public yet. It's just really a small beta preview, and it just caused a huge impact to the price of Adobe shares. Like, they lost $100 in the last 2 weeks, and they're going to announce earnings as well coming up mid-March. So wouldn't probably buy in to Adobe today or this week, at least right now, maybe on Thursday morning, but I wouldn't buy into Adobe until Thursday morning and wait to see what happens with NVIDIA. If NVIDIA causes the market to drop and Adobe goes down further, I think at any point below 546, Adobe is an extremely strong long-term purchase. And then the financials. So the risk here is there's now talk about another potential rate hike on the table. So as opposed to seeing rate cuts this year, which we were hoping to see starting in March, which was very aggressive, and have now likely been pushed off until April or May or June, so maybe spring or late spring, early summer. We're now potentially, with inflation on the uptick again, and the producer price index, the PPI, on the way up again. If those numbers continue to increase as opposed to decrease, we may see a rate hike. That is going to cause havoc in the regional banks in particular. And we're probably going to hear in the next month and a half about a lot of issues to do with commercial paper around commercial real estate lending and mortgages for properties and multifamily home properties coming due at and then renewing at much higher interest rates, which is going to significantly affect in a negative way the returns on those investments to shareholders. So that's something that could be a pretty heavy weight pulling down some of the financials. On the flip side, some of the larger financials, JP Morgan being one example, is doing extremely well and is extremely well positioned moving forward. Morgan Stanley's in pretty good shape. Goldman Sachs is in pretty good shape. So you have some that are kind of standouts. And then you've got some of the Canadian banks which haven't announced yet. And these have been in the doghouse for 2 to 3 years, but they are at attractive prices. They pay an incredible dividend, and when we start to see what these earnings look like in 9 or 10 days as they start to unfold, we may see some positive news, even though Canada is probably in worse shape economically than other countries, particularly the US right now. So we'll have to see what comes out. But that's your update for Monday, February 20th. I wish you the best.